Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. To start the webinar, the Australian dollar has struggled to establish any foothold to take prices to a sustainable challenge above the 76 figure 25 level, and also note is where the 60-day moving average comes in, which is around 25 also. The market at this stage still looks like it can continue to attempt to take the challenge higher, but whether or not it can sustain is another question. At present, I still hold the view that towards 76 figure 25 is a sell zone. As you can see, the market is very persistent this morning in taking the challenge there. Until we get a break above the top side, then the view is for a pullback towards 75.40 and re-establish from there. We have now slightly got a mixed story for the euro against the US dollar. As we look at the graph for the euro and also the US dollar story with the bearish euro and the bullish US dollar, the fact is this has been going since April and now questions where we are at the moment. As you can see, we've got a slight pause as the May closed for that month. Looking at the start of this month, we should still at this point not discount challenges towards 117.25 to 117.75, as the US dollar did reach its objective of 95 and has pulled back slightly since there. On Friday, the Bureau of Labor Statistics released its report on employment for May in the US. The unemployment rate showed a healthy gain in jobs that pushed the unemployment rate down by 3.9 to 3.8%. This is the lowest in 18 years. The average hourly earnings also had a pleasing release after rising to 0.3%, beating expectations of 0.2%. The story now for the euro could still see a pullback, but from the technical point, let's look for a rise first towards that top side of 117 before calling any downside move. I don't have a strong view though, but it's still a bit of a struggle in terms of where we're going, purely for the fact is how long this trend has been going for. And at this point, the ADX did get to 60 and it's gone sideways. So I'm a little bit cautious of coming out with a firm call. So I'd like to see how it play out in the next 24 to 48 hours. The dollar yen rebounds impressively. And as you can see, since the challenge of 108.45, the market's not looked back and now looks towards 109.95 as a potential target to the start of this week. A break at 109.95 would give further scope to 110.55 to 111.15 and reassess from there. Any pullback should see support around 108.95 on the day. The sterling is showing further upside potential, and at this point I do expect to see the market look towards the brighter side of the target of 134.50. As you can see from a technical point, it is pretty much very clear that the bulls are back in play as we move towards the 134 handle this morning. And as I'm looking for 134.50, I reassess from there. Dips to be shallow at 132.95 to 133.15. With the gold outlook now backing away from the 1,306 to 1,307, is the market's focus back on the downside. As I mentioned earlier, the US Labor Department reported a substantial wage gain, which pointed to a speedier tightening bias by looks of the numbers that came out. It was reported that the jobs were added of 223,000 from a forecast of 190,000 on Friday for the non-farm payrolls. This has actually put a slightly bullish traction on for the US against the gold. Purely for the fact is that we could see most probably a tightening this month from the Fed, with the possibility now of seeing a September also. So it'll be interesting to see what comes out of the statement this month from the Fed. But nevertheless, the support for the gold is at this stage 1,288. We have seen a low so far this morning of 91. Now a break of 88 would give further concerns to the downside and could see a move towards the recent stab low of 78.81. And reassess from there with the resistance on a day of 98. The flag pole to the bearish structure of the oil has broken and now challenging this level of $65 a barrel. It is viewed that we could fall further now that we've broken the flag and look down towards the region of 62.40.80, with the resistance for this week seen roughly around $66.5 to $67 a barrel. Overall, though, the market on Friday did see further weakness after the General Electric Baker Hughes Energy Services reported that 2 more rigs were added to June, bringing the total count to 161. Now that is the highest level since March 2015. So further supply is coming back into the market for oil. So let's see if the bears can keep hold of the rain and push the market to that downside test. Just be careful. There is a little bit of divergence here. So we may still see a rebound of 65. So just play very cautiously and see how the market turns out in the next 24 to 48 hours. So that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you enjoy the rest of the day that's ahead.